morning, everybody. It's Chris here from Serene Education with the 4 Majors Analyst update for the 18th of May 2012, Friday morning. Just going into the end of the week, and then let's have a look and see what's happening on the euro. To start with, daily here, as I mentioned, break of 1300 recently has seen price pull back slightly, hesitated, consolidated under the 1300 mark, and then let go. Pulled the trigger, and we've seen bearish sentiment all week long. And first port of call I mentioned beginning of the week would be 1260, 1265, and sure enough, we're heading straight into that area as we speak. There we go, 1265. Noticeable price support back in January of this year, and as price has been heading towards it, it's been getting a bit slightly slower. You can see the sentiment is starting to slow down as we head into this, primarily because people are starting to consolidate their profits as on the initial downside over here. So closing their profits, or closing positions, apologies, depending on how much they're taking off the table, 25, 30%, 50%, etc. So heading into 1265, the support, price is starting to slow down, a lot of less momentum. You can see more stronger bearish sentiment candles, and then followed by these small indecisive ones, little spinning tops and moving down. Spinning topic yet again this morning in the Asian session as we head towards this 12,6,500 mark. So what could we see? Further consolidation, presumably. News out yesterday was that Moody has downgraded more Spanish banks, which has not really done any favors, because we know Spain's also in a lot of trouble. So that means that all it'll mean is for all the locals, or if anybody looking to do any business with the banks, it'll cost them a little bit extra to do, and also bank lending, loans, etc. will be far more expensive because of the interest rates, etc. being charged. So not really good for the pair euro heading into this. So what could we expect? Possibly consolidation as we head into the weekend. So if anything, we'd like to see a break of 1265. Break of 1265 would definitely see a continuation to the downside. You can see 1265 here. If I just zoom well out, you can see 2010, August, September of 2010, a lot of support through that area. Break below 1265 would see further extensions to the downside, with potentially long-term at 12,200 being our next potential target. So keep an eye on that. Look for a nice break, 1265, pull back, and then a continuation lower to 12,200 shortly. Otherwise, what we could see is potentially consolidation as we head into this weekend for this pair. Next pair, sterling. Same as European counterpart. Break for 1600, which happened to be price support and resistance. Quite a noticeable one previously. I've seen price really move to the downside with a lot of momentum. Yesterday's candle very bearish indeed, and on the Asian market session you can see price slightly pulling back, but still nonetheless moving lower and heading towards that 5700, which happened to be price support and resistance in the past. We've now seen a complete turnaround in price action from this high there. You can see the 61.8, which happened to be our last port of call for this price support and resistance level here this morning. Back bang, really broken through with a lot of momentum, and sure enough, we've headed down towards 100. Now we're trading below the 100, but most importantly, you'll see price now is trading below the institution moving average, which was for the first time in as many months trading above just recently with this massive breakout. So not really good for this pair. This price swing high has now been cancelled, so this upside trend is now null and void, which means that we should be looking for downside pressure to consume this overall sentiment. And sure enough, that's what we're seeing. So where to for this pair if this is the likely case? You take the all-time low here, for example, right up to the high, because you can see this is a major pullback. So this is your all-time low to the major high that we've seen right now. And you can see that 23.6 was breached recently, followed by 38.2. Price moved towards at 5900. Now we've seen price yesterday hitting towards the 50% line and closing above it during the Asian session last night. However, we've seen price breaking through that 50%. Price has now got to stay below the 50%. More importantly, below the institution moving average. You can see our CTC is all in our favor. Everything's in our favor now. The only difference is our moving averages aren't in play. It should be 20, 50 and institution. Here we have the institution 50 and 20. The move is so great that these moving averages haven't even caught up yet, because the move has been so bearish over the past couple of days. So as everything stands, we can see price closing below 15,800. All importantly, below the 50% line here at the 1570. What is that? That is 1576. then we should see our next potential target being 1565 here. Down below us, break below that. Well, we can go all the way back down here to 1525. So things not looking too good at all for sterling. That's primarily as things unfold in Europe, which are having a close tie to what sterling is doing at the moment. So keep that in mind. Got to see price finding some sort of consolidation or resistance here at 15,800, or most importantly below the 50% retracement line. Then we could see definitely 61.8 over here at 1565, our next potential target going into next week. Next up, Swiss franc. Let's have a look and see. Yes, further sentiment moving to the upside, bullish across the board here for US dollar against the Swiss franc. And sure enough, all we've done is we've seen price moving, edging higher towards our 960, 965 mark, as I mentioned, price would do. So all you should be looking at is potential for upside movements. You shouldn't be looking for any selling at the moment. And you can see the all-time low here to the high recently, well above 22.6, moving average all below price, and we're steadily heading up towards that all-important previous high here at 9,600. If I take the previous high and I plot to the downside, you can see that all the moving averages, including the 61.8 to the upside here at 935, have been breached. So all the sentiment is looking positive to the upside. If anything, we could just plot our last fib retracement, which will be 78.6, and you can see that 945 here, slightly targeted in the past couple of days. A lot of consolidation as we head into this area. If we can maintain above 94500, then we should see potential for further upside movement to occur. Just be aware that the closer we get to this area here, the more stagnant or the more consolidated these moves will be. Okay, but most importantly, if you're looking for a trade for this pair, there might be scope for further upside movement. However, I think it might be very consolidative. Nonetheless, you can see the past 3 days, or the past 2 days in particular, as we've headed into this area here, very consolidative after this massive upside move. And if we are going to see any further progression to the up, testing these the prior high at 960, look for some consolidation or some support or a candlestick formation, a hammer or a bullish engulfing candle above 94500 on your smaller time frames to give you a heads up that we should be looking for further upside movement intraday. Last bit of the day is US dollar Japanese yen, and yesterday's candle not all that pleasing. Just confirming this negativity to the downside. After a massive move to the upside recently, we're expecting some sort of pullback, profit taking as such, but we thought price would eventually get back onto winning ways again, roughly around, if anything, roughly around the 880 mark, which happened to be the prior resistance level for this pair. We had that breakout. We saw price climbing well up to 8400, which happened to be a very strong prior resistance area, or price support and resistance area. A lot of indecision candles, followed by a bearish engulfing, and we saw price reverting to the downside. So we thought, well, where would it likely to go to if we had after a breakout, you want to see some sort of consolidation. So we thought, well, 23.6 could be a possible consolidation area, and it did. For a full week, it just went sideways. Then we saw a break to the downside, a very bearish candle, a lot of wicks to the underside, more buying set up above it. But this candle here really cancelling out all this support here, and we headed towards the 38.2 would have been our first target. Then we sat around 38.2 for a while, upside, up, down, upside, down. But then we started seeing we saw price making lower swings, and in doing so, forming that bearish sentiment. So break of 38, then we saw targeting 50, and 50 goes and ties in quite well with our very strong support and resistance area at 80. And we went sideways. We've gone sideways for the past couple of days, and I mentioned to you these past couple of days, a lot of indecision, a lot of consolidation around it. We want to see a definite decision candle. We needed a nice bullish or bearish candle, and I think we got that yesterday with this candle here. This is literally cancel out all this indecisive movement sideways. You're not making your money here trading sideways. We want to be trading momentum. You've got to be in this so we can see genuine profit as soon as possible. Okay, and I think yesterday's candle spoke volumes. This is now negative. It's gone quite far away from the 80, and in doing so, it's headed down towards that 61.8, which I mentioned would be our first target. Here at 79. A break of that now would definitely clearly signal that we should be looking for further downside movement. That institution moving average is still below us at 78.50. Get below that, and I think the sentiment is, well, we are genuinely in a negative sentiment, but it'll definitely stem that for the foreseeable future. This pair is nothing but bearish. Okay, so don't look for any buying sentiment over here. Look for potential consolidation, yes, as we head into the weekend. However, the overall sentiment on this particular pair is negative. The US dollar is struggling against this pair, and I think yesterday's candle has clearly indicated to us that the sentiment is looking favorable short, as we've now seen this candle, this bearish here, is engulfed this entire indecisive week, or 2 weeks in particular. So look for anything but shorts, wait for a break of 79 to clearly see potential for price moving towards 78.50, which is a nice little profit area, before we see tackling another price support and resistance level, quite a significant one here at 78, where we saw prior breakout, prior strong support and resistance level going back a number of months. Clearly here, hesitation through here. I've just zoomed out. You can see August, September, October, November, December of last year, going through January of this year, a lot of resistance. And before that, a lot of support for this pair at the 80 mark. So you can see where price is doing now in conjunction to the overall bigger picture. Broken a very strong support, price support. And by doing so, sentiment is now looking negative and formed this bearish candle here has formed a swing low at a very strong resistance level, price support, and we should take that into consideration as a very bearish signal. That's it, guys, for me for this today. Hope you have a fantastic weekend with family and friends. Make the most of it. We might get to see a bit more sun out here and well, so I'm going to be out with family and friends, enjoying Nicky and I just putting the last touches to our move. Other than that, have a great time with family and friends. Consolidate any profits, bring up any stops. If you're in profits, make sure that your stops are pulled up to maximize your returns. We don't know what happens on weekends. It's far safer to actually either to pull your stops up, so if anything happens or does happen, you do leave the table with a bit of profit. You don't want to be trading without any stops. You want to have your stops in place. They are your safety nets. Money management is paramount when you're trading. It's all very well having a great strategy, but if you don't back it up with sound money management rules, it's worth nothing at the end of it. Okay, so just enjoy your trading. Keep it simple. All of you students out there that use our strategy templates, please follow the rules of the actual template. It's very, very important. Otherwise, it doesn't help at all. Okay. Other than that, have a fantastic weekend, and I'll see you first thing on Monday. Until then, trade serenely.